At the crux of the conversation right now, Stephen, is U.S. regulatory reform and really global regulatory reform when it comes to major banks such as yours. President Obama last week coming out essentially pushing with Paul Volcker reenacting Glass-Steagall. Your take on that? You've cautioned reform too much is quite dangerous.
Reform is essential. I don't think anybody would deny that you need to reform and strengthen the financial system and learn from the lessons of the crisis. The all-important question is how you do that and to get it right. The risk is that you so cramp the style of the financial markets that you contract lending and strangle the macroeconomic recovery. That is in nobody's interest. So the important point is to debate this carefully through. Frankly, if it takes a bit of time, it's more important to get it right than to do it quick. And I do not think that some form of reintroduced Glass-Steagall is an appropriate way forward. Indeed, I don't think in practical terms it's implementable. The devil's in the detail. If you think about proprietary trading, which has attracted a lot of attention, what exactly do you mean by that? How do you define that in a way that's implementable is a very important topic. And frankly, I think it's very difficult to do.
In terms of using insured investor funds at commercial banks for proprietary trading, it seems to be clear to even a number of top bankers I've spoken to who said it makes sense not to allow that. You completely disagree?
At one end of the scale, there is punting, for want of a better word, which probably isn't in anybody's real interest. At another end of the scale, there's customer facilitation, book management, balance sheet management. Are you really saying there should be no market risk at all in a bank's books? Plainly not. So getting the divisions right would actually be an extremely important and almost impossible task.
I think that's the
real
real
push whose funds
here.
It is, you've still got the issue of whether or not a bank is engaged in maturity transformation. That's a form of market risk.
So what kind of reform?
What about the foreign exchange markets?
Sure.
Are we saying that the banks should never participate in an open way in the foreign exchange market? You know, this needs a lot of thought. You can't do this in slick headlines.
You've been outspoken about ethical banking. So what kind of reform in your mind is necessary?
I think there are a lot of reforms that are necessary. I think making sure that the capital levels in the industry are right, making sure that the areas of activity have the right forms of capital. And one of the things,
less leverage, stronger tier one capital
leverage
ratios.
is another question. Liquidity is yet another question. All of these three things are very important. And the proposals that were put out by the BIS just before Christmas, they're very detailed, they're very complex proposals. A lot of discussion is going on, a lot of analysis of their impact both on the banking system itself and their implications for the macroeconomy is being undertaken at the moment. This year is a very important year for all of this. By the end of the year, the target is to have had all the definitions sort of pinned down so that we know that we can go forward in the years to come with a stabilised, strengthened market system.
Compensation, certainly a hot topic right now around the world, particularly in the United States. In Davos, it will indeed get a lot of attention. I spoke with Sheila Bair, the head of the FDIC, last week, and she said flat out, these outsized bonuses are inappropriate and banks need to focus on the real economy. What's HSBC's stance on compensation?
Well, I quite agree. The banks need to focus on the real economy. In order to focus on the real economy, they need to make sure that their compensation is properly aligned with the real interests of shareholders and the wider community. That involves, I think, removing distortions that have been around in the system. There's no question of that. The initiative, the principles set out by the G20 are important in that regard. In the case of the UK, the FSA Code, which is now mandatory, does, I think, the essential work that you need to do to have the interests of a trader's compensation properly aligned with the interests of the bank, the residual risk on the balance sheet and so forth. Getting these things right will lead to the bedding down of a new and better compensation practice.
Are you confident that we will see a shift in compensation in the next year? Is it really going to happen? There's been a lot of talk, yet little action. We have seen clawbacks at many Wall Street firms, but what real change are we going to see?
Well, I think it's too early to tell exactly how it all pans out in respect of 2009, and of course 2010 has barely started.
Sure.
But I think where we ought to be headed for, and indeed, like I say, the FSA Code pushes very strongly in that direction, is what you might say is proper pay for proper performance.
Want to shift to China. You're quite bullish on China. The CEO, Michael Gagan, moving to Hong Kong. Is this a display of a power shift from London to Asia and you're continually bullish on China, correct?
I am certainly bullish on China. I believe that China's performance over the next generation is going to continue to be astonishing. This is continuing to be...
Astonishing? Define astonishing for us.
This is an extraordinary story of a country that emerged from a very poor and difficult background into a successful, powerful, modern, diverse, sophisticated economy. And we're in the process of that. And you're watching this unfold before our eyes. And the emergence of China, or re-emergence of China on the world stage, is a challenge for everybody. It's going to change the way the world's macroeconomy looks. It changes international relationships. It changes everything. In our case, we have our roots there. We're the HSBC, the Hong Kong and Shanghai Banking Corporation, and we never forget that. That's where we were founded. And Mike's move back to Hong Kong, and back is the right word, is taking the management of the group back to where the central gravity of the group's business is. We're not moving our legal domicile. That remains in London. We're not turning our back on London. It's not an issue about London. This is an issue about where our centre of gravity is, and of course where we believe the world's macroeconomic centre of gravity is shifting.
Is shifting to China. Yeah. We'll be watching. Thank you so much.
Asia in general, not just China.